In this section, I'm going to walk you through an example of a trading system to give you an idea of what your rules should look like. This will help give you something to model after. So the first thing we're going to do is define our time frame. So what time frame are you going to trade on? In this example, I'm going to choose the 1 hour time frame as the base time frame that we're going to trade on. Next, the second step is to determine the trend. So like we talked about, there are various indicators that help us to determine what the current trend is. For my example, I'm going to use the 50 EMA and the 200 EMA in order to determine the trend. To do this, I'm going to say that when the 50 EMA is above the 200 EMA, that indicates an uptrend. And then like we learned, when the 50, for example, the faster EMA crosses the slower EMA, that means that it's a reverse in the trend. So then when the 50 EMA is below the 200 EMA, that's going to indicate a downtrend. So after determining the trend in step 2, in step 3, we're going to confirm that trend. Remember, we don't just want to go based on the EMA and that's it. We want to have a second confirmation of the trend. And for my example here, I'm going to use the RSI. You could use stochastic or any other indicators that we talked about to help confirm the trend. But I like this oscillator, the RSI 6 period. And then what I'm going to do is actually have the oversold level be at 20 and the overbought level be at 80. So this will help to let me know if the current market is overbought or oversold. And that way, if it's, for example, oversold, I wouldn't want to get into a sell trade at that time, right? So if these two match up, the direction of the trend, whether it's up or down, and if that matches up with either buying or selling based on the RSI being oversold or overbought, then that's going to be a good confirmation for me to get in on a trade. So now in step 4, we're going to define our risk with this strategy. In my strategy, I'm going to do 2% on each trade. You could do less than that or more than that, just depending on your risk appetite and what you want to test out. Next, in step 5, we're going to determine our entry triggers. So for this strategy, for example, I'm going to say that when the 50 EMA is above the 200 EMA, which, like we said, indicates an uptrend, and the RSI shows oversold, which means that the RSI is below the 20 level, then I'm going to take a buy trade. And then as well, if the 50 EMA is below the 200 EMA, which indicates a downtrend, and the RSI shows overbought, so it's above the 80 level, then I'm going to take a sell trade. So as you can see here, just like I explained, this has multiple indicators lining up, which is a good indicator that I should get into a trade. Finally, in step 6, we're going to determine the exit trigger. So with all of this criteria, we know we're risking 2% per trade. We're getting in on those entry triggers once everything lines up on the 1 hour chart. So now we need to know when exactly are we going to exit these trades. Well, first of all, with that 2% on each trade, we need to know where's our stop loss going to be. So what I'm going to do is set a stop loss at 2 times the current ATR based on a 6-period ATR. You'll actually learn in an upcoming module that this is a really good way to set a stop loss because it takes the current volatility in the market to set your stop loss. So I'm going to use the 6-period ATR, take 2 times that and set my stop loss there, and then determine my lot size based on that 2% on each trade using the lot size calculator that we have, which you'll also learn about here in one of the upcoming sections. Then for exiting the trades in profit, I'm going to exit the trades when the RSI goes from overbought or above the 80 level down to the 20 level or the oversold level, or vice versa, right? Depending on the entry criteria. So if I get in, for example, on a buy trade here because the 50 EMA is above the 200 EMA, and I get in because the RSI is also at this time showing oversold conditions, meaning that it's below the 20 level, I'm going to buy, and then I'm going to close that trade once the RSI goes all the way up to the 80 level, because now it's saying overbought, which would be a good time to sell, and I don't want to be in a buy trade at that point. So that's about it. It's pretty simple, right? Just remember that a trading system is only effective if it is followed to a T. You need to be disciplined and stick to the rules of your trading system in order for you to really test out your trading system and make any adjustments that you need to along the way.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.